In this video, I will give you investment advice from Ray Dalio as he warns of what he calls the changing world order, which means a change in the global powers both politically and in the monetary system we use. You'll see the specific assets he is buying now, and I'll show you how you can easily follow his advice in your life. But first, who is Ray Dalio? Ray Dalio has spent his life building what is now the world's largest hedge fund, Bridgewater Associates. He is currently in his early 70s and has a personal net worth of $20 billion. His fund, Bridgewater, manages about $150 billion in assets. This puts Dalio as the 36th richest American today. But Ray wasn't always a billionaire, and he didn't always get things right. Starting out as a trader, Ray boldly predicted a crash in 1982. But when it never happened, he lost most of his portfolio and had to let go of his whole team. This giant setback caused Ray to reflect deeply on his approach and change his whole strategy. He used a new, more reflective approach to build the $150 billion fund we know him for today. One of Ray's most famous equations, pain plus reflection equals progress, emerged from this experience. The crucial lesson Ray learned was that while events might surprise us because they haven't occurred in our lifetime, most economic events have happened before. History often repeats itself, but these cycles can be longer than a human lifetime. By studying history, Ray discovered recurring patterns that he then used to successfully predict what to buy and what to sell as stock prices go up and down throughout the years. In his recent book, The Changing World Order, Ray shares his deep dive study of the past 500 years of economics and history. He used 500 years to uncover many unique and major events that can and do happen again and again, even if they're not in our lifetime. If we just look at the past 10 years, 50 years, or even 100 years of economic history, we won't learn some of these major lessons. The next major event Dalio is predicting right now is a shift in the global reserve currency. The last time this occurred was when the British pound was replaced by the US dollar after World War II. With the history and context, let's look at specifics. We'll start with Ray's current holdings and what his advice is at a high level. Then we'll give you specifics on how to follow this billionaire's advice. Here is a recent table of Bridgewater's stock holdings. As you look at this list, you can see some themes. Dalio is buying and holding stocks in emerging markets, consumer staples, and gold. Bridgewater's three largest positions are emerging market ETFs. ETF is an acronym for Exchange Traded Funds, which are a group of securities that trades on an exchange just like a stock does. Let's look closer at gold. On our previous chart, you could see 2% of Ray's portfolio, or $393 million, is SPDR gold shares. GLD is an ETF that's backed by physical gold. Bridgewater's portfolio increased this position by about 50% over its previous quarter. With worries of inflation in the US, Bridgewater thinks increasing its gold ownership is a good play. This is a theme you'll see from many investors as they prepare for inflation. Comment below if you prefer buying ETF shares or physical gold. Next, let's look at what investors call consumer staples. Consumer staples are products that people regularly use and need in their daily lives, such as food, beverages, and household items. In investment terms, consumer staples refer to the companies that produce or sell these essential goods. The stocks for these companies are typically considered more stable and less affected by economic ups and downs because people always need these basic products, even during tough times. Some of the top individual stocks to buy, according to Bridgewater, are makers and sellers of consumer staples. As an example, Bridgewater has $439 million of Coca-Cola stock, something they and Warren Buffett have in common. They also have $700 million in Walmart, $400 million in Pepsi, and $352 million in McDonald's. But we're not all full-time investors, and not all of us love looking up acronyms and stock ticker symbols all day. Ray has a team of 1,500 people working with him full-time to help figure out these buying and selling choices. What about you? This is where Ray's all-weather portfolio comes in. For simplicity, Ray has given us a simple diversified portfolio that he would use if he wasn't actively investing as a professional. Before we get into Ray's portfolio, here are two words of context for this portfolio. 1. Portfolio size. As you begin your life, it's important to invest in yourself. Starting with a small portfolio size, your investment returns won't make as big of a difference on your life as increasing your income will. For example, if you've got $1,000 and it's giving you a return of 10%, that's only $100. If you spent that $1,000 to buy a course on a new paid skill or certification that helped you earn an extra $5,000 to $20,000 a year, that would make a much bigger difference in your life than $1,000 invested in stocks would. If you want to see my full video on this, click the banner. 2. Who is this for? Despite all of the praise for the all-weather portfolio, it may not be a fit for everyone. This all-weather portfolio is for you if you get very emotional about losing money. You want a simple and easy way to preserve your money with decent growth over the years. It is not for you if you want very high growth in your stock portfolio. You obsessively look at the performance of your individual position every day. Ray's portfolio looks like this: 30% US stocks, 40% long-term treasury bonds, 15% intermediate term treasury bonds, 7.5% commodities, 7.5% gold. How can you match this? You can talk with your financial advisor and tell them you'd like to match your portfolio to the all-weather fund. Or, if you'd like to do it automatically, you can have software match and rebalance your portfolio for you. Websites like M1 Finance have options for this you can set up in a few minutes. I've linked M1 in the description below. If you'd like me to do a video specifically on how to set this up, let me know in the comments. Thank you for watching. We've learned a lot in a few minutes spent with Ray Dalio. If you've liked these ideas, please give us a thumbs up, share with your friends, and subscribe to our channel for more expert guidance and practical steps from the best minds in money.